All right, good afternoon, and welcome back to the Money Advantage podcast. We're talking at a atypical time. We're usually in the morning, and we have some new faces on the podcast today. I'm very excited to introduce you to Becca Wilhite and Joe DeFazio. Thank you guys for joining me today.
You bet. It's great to be here.
Yeah, pleasure. Thank you for the opportunity.
Awesome. Well, today we're going to be diving into some ideas around infinite banking and really talk about some of the differences of opinion that we see out in the world of media and content and videos and marketing around the idea of infinite banking. And if you are even remotely familiar with the idea or the words infinite banking, chances are you probably have an opinion because this tends to be a fairly polarizing subject, as with anything, I think, of importance. And as somebody begins to look at something of importance, they quickly form either a positive or a negative perspective of it. And that is very prominent in marketing. You see these messages all over the place. And so it can be hard to unpack and figure out really what is the truth when it comes to infinite banking, because you'll hear somebody has a really negative opinion and they say, well, that is not valuable. And here's all the reasons against infinite banking. And then you hear us talking about infinite banking and we say all the positive reasons for infinite banking. And so we want to just really be able to have an open dialogue today about the idea of infinite banking. What is fact? What is opinion? Is it fiction? Is it someone's opinion, or is it actually something that you can count on and make decisions moving forward? And so today we're going to be really talking about one specific idea, and that is you might have heard of this idea in infinite banking that basically it's just this vending machine, this quick way that you can, instead of having to go through all the discipline of, you know, being a good saver and having a good income and having good credit and good credit score, instead of having all of that, we'll just skip the bank altogether. And instead, you can just go to this place where you can have easy access to cash. You don't have to have any financial responsibility whatsoever. You just get a policy and immediately you have, you can borrow against loads and loads of capital. And doesn't that sound too good to be true? Yeah, it
Sign
does.
me up.
I know, right?
And you get three wishes to boot. It's
Yep,
awesome.
there you go.
Yes. So it's messages like this that can sometimes muddy and murky up the waters when it comes to infinite banking. And of course, if you heard somebody say what I just said, you'd say, well, that sounds ridiculous. Let's just cancel out that message altogether. So we're going to dig into that particular idea, but also this big concept of where do these ideas, these questions, this skepticism, the doubts about infinite banking come from? And we're going to kind of look at them from two different perspectives. What is the opinion? What is the doubt? And what is the truth about that? And so I'm super excited for this conversation today. And Becca and Joe are members of our advisor team. They're talking with clients on a regular basis about using infinite banking and putting infinite banking in place in your life if you happen to be a client or about to be a client. And what I love is the opportunity to be able to let them share who they are with you, because it's amazing for you to get the opportunity to know more of the members of our team. So, again, thank you guys for joining me on this courageous and exciting topic today.
You bet. Well, if I could just kind of piggyback Rachel off
Absolutely.
just the whole reason we kind of started talking about this is, you know, we're not here to win an argument and prove, oh, we're so right and you're so wrong. Like it's nothing like that at all. I think our our motivation is we really want to do what's best for our families. And if we found this thing that, wow, this has really improved our quality of life, this has improved our peace of mind, um, we should teach this to other people. Right. And here's the thing, you only know what you know today. You only understand what you make decisions based on the understanding that you have today. I could not, when I first heard about this, I could not have been more closed minded. I just thought this is a scam. There's no way this is right. And really just set out to disprove it along the way, because I had been taught all my life that whole life was a terrible place to put money. It's a scam. It's a, what is it, the payday lender of the middle class, whatever. all these things. This is the perspective I was coming from. And so it just, there was no way this was going to have any validity in my life. But in that process of gaining a greater understanding, almost accidentally, with the wrong motivation, but gaining a greater understanding of how this worked, I started to both have a change of mindset and also realize how misunderstood this product is. I called my insurance agent like during this time and asked him to explain, can you explain to me how life works? Like, just explain to me who's right. He couldn't do it. He was kind of stumbling around, and he was mostly a PNC guy, right? And he's kind of, well, it's kind of complicated, and there's all these things. So that wasn't any help.
Yeah.
Right. So I'm like, okay, if the information that we're getting is incomplete at best and extremely flawed at worst, could there be some solutions that we're missing out on because we stopped there?
Becca, that's fantastic. I love that perspective. I feel like, well, there's this book, and I'm gonna have to figure out who wrote it. It might have been C.S. Lewis, but Letters from a Skeptic. Are you familiar with that book?
I am.
Like,
Yeah.
you could basically be the author of Letters from an IBC skeptic, right?
Yeah, absolutely.
I think there's a lot of value in that, because if you set out to disprove something, and in your pursuit of the information you need to disprove something, you find yourself being convinced of its validity, that's powerful. You didn't start out with a open mind. You start out with a closed mind, and it overcame your objections,
Yeah.
which is powerful.
Yeah. And, um, I'll let Joe speak to this a little bit, but, even Nelson's book, it's called Becoming Your Own Banker. None of us have arrived. I learn things every day. And speaking with clients and speaking with colleagues, just different. Anyway, I'm probably going on a rabbit trail already. Let me pull it back a little bit.
That's
But
okay.
we're becoming, right? We're becoming, and this is a learning process and a lifelong journey.
Oh, absolutely. Joe, any thoughts you want to share at this point?
I mean, I have a similar backstory. I don't want to take up too much time, but I was formally trained in what I call modern financial planning. Started in 1985 with the CFP board. And so I had a very skeptical view of this book. It took me a decade reading it multiple times because I started with the wrong, I came to the table with certain assumptions based on my training and was looking through that methodology to try and rationalize this and make sense of this. And it doesn't fit that way. But there was enough there that kept me like, wait, what about this? And what did he mean by this? And why is he so confident here? I can't prove what he's saying or disprove it until, I had an epiphany at the 10-year mark. I'm a little slower than Becca. It was like, whoa, oh my goodness. And then once you see it, you can't unsee it. And just to clarify for the viewers, it's not a product. We're not talking about a product, right? It uses a product, which happens to be whole life insurance, but it's a process. Those should be distinct in your mind. What he discovered was the process and was observing the process and just found the best tool to implement that process on a personal you and me level. From the ground up. So
I'm so thrilled to be able to talk with you guys because of your background and because of your unique way of communicating, because of the way that you uniquely think through infinite banking. This is just a powerful platform to be able to share these concepts and tools for you who are listening, to be able to make decisions and to be able to think through your own concerns or objections or skepticism about infinite banking. So let's go ahead, and I want to read an article that I think, Joe, you first brought to Becca's attention, who shared with me, and it talks about infinite banking from a perspective of disbelief. And I guess you know this because the title is The Problem with Infinite Banking. So this is something we came across on LinkedIn. And here's the article. Imagine this. You're sitting across from someone who tells you you can be your own bank. I need to clarify again, this is not our writing. This is the person who wrote this article on LinkedIn. So imagine this, you're sitting across from someone who tells you you can be your own bank. No more relying on traditional banks, no more hoops to jump through, just complete control over your money, all while it grows tax-free. Okay, I'm sure you, with your critical minds, we've already spotted about 6 problems here with the with what he's saying. Okay, sounds incredible, doesn't it? But here's the catch. There is no bank, and it's not infinite. The quote unquote, he says, infinite banking concept is a sales tactic used to push cash value life insurance policies. It's dressed up as a solution to all your financial problems, a way to create your own banking system. But behind the flashy language and overpromises, there are risks. If the policy isn't structured properly, or if assumptions don't hold up, you could face higher costs, lower growth, or even policy lapses. And problems there. And unlike a real bank, you don't have the liquidity or guarantees that are often implied. Here's another red flag. The original concept was designed with whole life insurance in mind, but today you often find it being pitched with IULs, which are structured completely differently. He's right about that, and it is a problem. And then there's the sales pitch, the one that calls this the secret of the wealthy. The truth, no one gets rich from life insurance. The only wealth it creates is for your beneficiaries after you're gone through the death benefit. We could unpack this for weeks, and we probably will. I'll read the last sentence. It says, if someone tells you life insurance is a magic shortcut to financial freedom, I'm here to tell you that it's not. I will agree with that line. So, okay. So just as we start, what does that article stir up for you? I'm going to have you start, Joe.
Sure. So the very first thing, one of the things he highlights, it's a sales tactic. And I'm just reminded of, if you go back to Nelson Nash's book, it's like page 3, sentence 1 or 2. He's like, this is not a sales tool, period. Like it's not actually even written. The concept wasn't even presented for agents. It was presented for the general public. So it's right away, I'm like, he didn't do, and the other reason this came across my news feed, but he didn't do enough due diligence. He didn't do enough reading. He doesn't understand the concept to be speaking about the concept. I would guess, I've never talked to the person, emailed the person. Again, it's just one of those sponsored things that popped into my feed. I would guess they looked at it, were like, ooh, attribute the process to the product. It's all about whole life. It's a sales tactic for whole life. Let me talk about and argue against whole life.
Mm-hmm.
But there wasn't anything about banking. The only thing he said was there's no bank, but he didn't talk about the flow of money. In fact, he didn't discuss many of the actual attributes of Nelson Nash's concept.
Mm-hmm.
That was the first thing that jumped out at me.
Yes. Oh, that's perfect. That's perfect. And I love that you are pointing out that most people equate infinite banking to a life insurance policy. And it's not. It is a process of utilizing a product for the purpose of storing capital, being able to be in financial control. And Becca, I'm going to give a shout out to you with your book, Beaver Bankers. I think about this all the time, and I'm going to have you speak more to it. But you wrote a book that is intended for children to understand infinite banking, yet it provides clarity for adults and all of us to understand the reservoir that you create and the power that you create by putting controls and stops and keeping money in your control rather than just letting it flow. Would you just speak to that concept briefly?
Yeah, absolutely. And that's one of the things that stuck out that he said right away. This is just access, easy access to cash. That's the only thing this is, right? That's it. But what it made me think about was, okay, let's say that that's all it was. Let's say that he was right, but it's access to cash that was previously just flowing away forever, right? I mean that's the default, is that every dollar that runs through our hands throughout our whole lifetimes is flowing to someone else, into someone else's control. Even when we say, we used to be, in my previous life, we were cash buyers. So anything that we wanted, we would save up and pay cash, whether it was a car or, vacation, whatever it was. And so I was thinking about this whole concept of even saving, whether it's a car, maybe it's for your saving for retirement. Are you really saving, or are you just delaying the spending? Like you're keeping that money in your control for a little bit longer, but then again, you spend it and it flows off to somebody else. So I think the whole idea, the problem that Nelson was addressing is that if you plan on spending any more money between here and the end of your life, that money is going somewhere. And you're gonna do it one of two ways. You're either going to borrow from someone else and pay interest. So there's that you're benefiting someone else by paying them interest, or you're going to pay cash. And this is the part I didn't get, is that even when you pay cash, you're giving up the opportunity cost of what that could have earned. It's still flowing away from you forever. And so go ahead, Joe.
I was going to say, don't look like, don't be, I skipped right over it. That's why I had to read it. It took me like a decade. It's like you're looking at half the picture and you're like, if I put money in the savings account and then use it, I only had to do it once, right? But if I go over here and I borrow, I got to pay it back and there's an interest component. But you forget the other half. There's no free lunch. You got to put the money back. And if you're being honest, you that money would have grown to up here like a little like it would have had some interest rate. So you have to put the money back plus the interest anyway. If you're being honest with yourself.
Yes.
It's not, don't beat yourself. It's everyone skips over the second half of that equation.
Yes. I think I'm such a visual learner. It was presented to me in a visual way the first time I saw that, which made complete sense. And I probably would just need to present it visually rather than try to explain. But it was almost like if you just borrow only and you never save, you just borrow for every purchase. Let's just say it's for a car every 5 years. Then you have your zero net worth line here. And every time you borrow, you go into a negative net worth. Then you repay that loan, you're stair stepping back up to zero. And then you go buy another car and you go negative net worth because you've taken a loan. You repay the loan and you stair step back up to zero net worth. And if you continue that method of purchasing, you're not moving ahead, you're just borrowing and repaying and borrowing and repaying and cycling negative and then back to zero, negative back to zero. Well, paying cash was the opposite, but exact same scenario where you store up the cash, you have to stair step up the cash. So from zero, you're stair stepping up as you're putting incrementally into a savings account. You get to a point where you have enough to buy the thing, then you deplete the account, you drain it down to zero, you get back to your zero line. You say, great, I've got a car. Now I need to start saving for the next one that I'm going to buy in 5 years again. And so I'm stair stepping up my savings. I get to that peak of, oh, I have great savings and now I have a lot of money in the bank. Now I buy the car again. Now my savings account drops back down to zero. And the challenge with that is you never get off the zero net worth line if you're using cash in that way because you're not maintaining anything long term. And then you see these beautiful compound interest curves and they start low and they go this small amount of growth and small amount of growth. I don't know, in math they call that parabolic. I don't know if that's the right word, but that curve that starts slow and then curves up and it starts going way like shooting straight towards the ceiling, almost vertical. And you say, well, I want that kind of growth on my money. And savings is supposed to accomplish that, or maybe investing is supposed to accomplish that. And okay, well, if I save, but I use my money, I'm never moving up that curve. I'm just truncating it and starting over. And if I'm investing, but I have losses in my investment and it's not actually consistent, guaranteed year in and year out compound growth in your investments, it's a average rate of return, which we don't have time to get into all that, but that's not compound growth either. And so no one really has this experience of compound interest where they say, my great great granddaddy started compound interest and I'm reaping the benefit of this money that's never come out of our family's control. But we can do that for our great great grandkids.
Can I like just I want to
Yeah.
add two more things to this just
Yeah.
to add a little more for your viewers. Um, in that scenario, this is from the perspective of like the borrower or the client, right? But there's multiple characters in the play, right?
Mhm.
So there's another character. We don't have too much time to go through all of them, but we'll just say the owner, for example. When Rachel's borrowing and repays it, someone owns that business that she borrowed from, and earns the profit, so the dividend that you did not earn. So not only did you pay interest and principal, lost the scaling effect that she just talked about with the compounding, but somebody else earned profit off that. So you lost the dividend too. You're like at the bottom of the barrel, like you're paying yourself last here.
Yes.
So like there's multiple, if you look through all the characters he outlines in this book, it's really, it sounds so weird, but if you really take the time and look at each transaction through each perspective, man, it's really illuminating. Yeah, I just wanted to add that it's not just the interest rate, because some people will try and do like some type of interest rate arbitrage and say, but my interest is getting just a little bit more and this one's getting a little bit less and I'm winning. My line's going a little bit like this. It's like you're missing the forest for the trees here. But yeah, it just something to consider there.
That's awesome, Joe. And I think what is really important is recognizing that, let's come back to the whole idea that was kind of unpacked in that article we read, that you're in a position of, you don't have to rely on the traditional banks. You don't have any hoops to jump through, just complete control of your money, all while it grows tax-free. Sounds incredible. Okay, so what he's highlighting in that component of the article is, if you start this process, you're just automatically going to create this opportunity to have lack of financial discipline and make poor decisions everywhere else in your life, but you're just going to be able to automatically get to the front of the line whenever you need cash and not have to go through the cumbersome banking process. Now, he is right that you don't have to qualify for a loan. You don't have to have a good credit score. You don't have to have income to prove you're going to repay a loan. And that is one of the advantages of infinite banking. The problem that I see with that kind of thinking is that it is limiting. It only is zooming in on one component of infinite banking in this whole process of taking control of the banking function, storing capital and valuing storing and holding capital for the sake of understanding that if you hold capital, you're in control. Then you are the banker or the bank, not just the customer of the bank that's paying another institution, and that other institution is earning dividends and interest on your money. Now, instead, you get to be the banker who's earning dividends and interest. And that ownership has a lot of positives, a lot of advantages, a lot of benefits that you can take advantage of during your lifetime and when you pass away. But I think what can be the challenge of somebody just looking at that access to cash and thinking it's almost like an easy, it's an easy out. It's an easy button. It's a magic pill to get access to cash whenever you want it. The challenge with that thinking is, usually people think, oh, all I need to do is get a policy, and then whatever the death benefit is, I can get that much money. The problem is it doesn't work that way. The amount of capital that you have access to is directly related to the amount of capital that you have been willing to store and put away using this particular type of product. It's not just an automatic transaction that you get a policy and now you can borrow against the larger amount, which is the death benefit. The cash value is related to the premiums that you've paid in. And the only way that somebody would be willing to pay high premiums into anything or put a lot of cash into something is by recognizing the value that you can have from doing so. So Becca, what is this making you think of?
Well, Nelson always said that wealth has to reside somewhere. I mean, whether it's in a bank, whether it's in a life insurance policy, whether it's under your mattress, it has to reside somewhere. And so I think, to take an honest look at the benefits of these different places that you could store your wealth. But I want to come back for just a second to the whole idea of this access to cash. And one of the huge benefits, I think, is that you're taking these loans. We're not taking the money out of our policy. We're using our policy as collateral. The cash value is collateral. We're borrowing the insurance company's money. The loan repayments are then unscheduled, unstructured. I can pay those back anytime I want, in any way I want. Now, why would the insurance company allow that? Is there anybody else that'll just say, oh yeah, when you get the money, I mean, maybe if it's a loan from your grandparents or something, just whenever you get the money, just go ahead and pay me back. Why would they allow that? And the reason is that they're both holding and guaranteeing your collateral. So they're holding your collateral and they're guaranteeing that it's going to increase in value every day. I don't know of any other collateral source that is guaranteed to increase in value every day. If I took a loan against my house, I could go take a HELOC at the bank, but there's no guarantee that my house is going to be worth more in 5 years than it is right now. Now, we hope it will be, but there's no guarantee. So what do? They put me on a schedule to make sure that they're profitable with that loan. Whereas the insurance company is saying, well, look, we know what's going to happen. There's no question mark here. It's going to be worth more in 5 years than it's worth today. So I think that's one of the things that's often overlooked in that whole process. So it's a huge plus of just the peace of mind that, hey, I want to repay this as quickly as I can. But if life happens, it's okay. It's okay.
I think it's really powerful to be able to rest on those guarantees. I think that's one of the things that attracted my husband and I most to using whole life insurance in the first place, was this idea that it's not well, we think you're probably going to have this much return and maybe your cash value will be this and maybe it'll be that and it's pegged to the market or the index fund or whatever. It could go down. It could actually drop in value. None of that. With a properly designed whole life insurance policy, you have guarantees on how much premium you will need to pay it will not increase beyond that amount. So it's a guaranteed premium. You have guaranteed cash value, the minimum amount of cash value you will have, and that is a set in stone guaranteed amount. And then you have a guaranteed death benefit. It will absolutely not be less than this particular amount. And the amazing thing is that you can make different decisions in your life when you have that kind of confidence.
Absolutely.
Becca, I love that you were just saying you could use a house. But I think that's a really good plug to go back to. This is a process. You could use your house with the equity but then you got to ask a bank for permission and play on their terms for access to capital. You can create a similar type of environment. It's not nearly as efficient. You could do the same thing if you have a very large stock portfolio. To a lesser degree, they'll only give you 50% of the value compared to maybe 80% of a HELOC. But you could do it. You could do it with your CDs. You can collateralize your CDs and ask the bank to give a loan against the CDs. So the process would be the same. It's just which environment is most beneficial, most favorable, most friendly to you. It's not that one. It's not any of those three. It actually happens to be whole life insurance, specifically participating whole life insurance, because your interests are aligned. Because when it's participating, that's like saying you're partner with the company. So now when they're doing what's in the best interest of the company, you're part owner of the company. That means it's also your best interest. So the interests are naturally aligned. So it's the most favorable environment.
Joe, thank you for pointing that out, because that's not the case when you work with even just the bank. I mean, you were pointing out earlier, there's really two sides of the table when it comes to working in a banking environment. You have the customer who's disadvantaged, and you have the banker who's in the position of control, who's going to earn the interest, who has the capital, who gets to do the arbitrage, who earns the cash flow. I mean, they're the one who sets the terms. They are going to take the least risk and push the most risk down onto the consumer. And so when you have that separation, those interests are not aligned. You realize that they are the opposing player. They are your competitor. They're across the chessboard from you. But you're saying with the life insurance company, when you're participating, you are a part owner. You own the policy. You are an owner of the company, and they're not working for someone else. They're working for you. You are on the same side of the game board.
Exactly. That's a much better way to say.
No, yours was awesome. I was just accentuating your point. So this conversation has been powerful already. So I don't know, because I wasn't watching the chat, if anyone has jumped in and asked any questions live. So this is also an atypical time for the podcast. Most of our usual listeners are in the morning on Wednesdays. So if you do have questions specifically about whole life insurance, if you have questions about anything that you have heard or that you have cause to believe that are against infinite banking, but you really want to understand, and I want to make this point of distinction and clarity. We're not looking for arguments that doesn't benefit us or you. But what we are looking for is when you have some kind of a limiter, something that you just are trying to wrestle through, similar to Becca or Joe, you're trying to wrestle through, you want to understand something isn't working for you, something's not making sense. It seems like there must be either a black box or there must be information that's out there that you just don't quite know how to grasp. And based on what you've heard or what your financial advisor has said or what your brother or your friend or your neighbor or your own personal experience, you're having difficulty really understanding what infinite banking is or why it works for you or why you would want to do it, but you're curious and you want to understand. We really invite those questions. Becca and I had a conversation, I don't know if it was yesterday, about this whole idea of asking questions, because when you have the ability to ask your questions and no question is off limits, when you really have freedom to say, I don't understand this and I want to understand, there's no bad question in that context, because we will either find answers or we will point you in the right direction. We will share answers or we will find and seek that wisdom and truth to be able to share with you, because it's the same thing with anything really worth understanding. If you can't ask the question, then you just have to accept something on faith, and that's not as strong of a foundation for really making a decision of conviction. And Becca, you said something really powerful, and I want you to say it again because I hope it comes from you even better. But you were talking about that, the problem that comes from the non-resolution when you don't ask the question. Do you remember what you said?
Well, I think a lot of times we won't ask because we don't want to look stupid or we don't want to look argumentative, and so you just kind of don't ask and nod and okay, yeah, that sounds great, and then you get out of that conversation or off that call or whatever it is, and you just kind of go on to the next thing and don't think about it again because it feels kind of maybe awkward or uncomfortable to feel like you're not getting it. Is that kind of what you're speaking to?
Yes.
And so I think what our hearts are as advisors at the Money Advantage is really that heart of education, of teaching, of explaining. Like we're happy to take you from scratch to explain how to. In fact, we'd almost rather take somebody who knows nothing than somebody who thinks that they know all about this, right? And that's fun too. But really our heart is to educate. There are no dumb questions. We really are on a search for truth, and what we found we want to share, and if that gets challenged, that's okay, that helps us grow. But we want to educate, provide a way for other people to catch on to this, to latch onto this, because of what it's done for us and what we feel like it can do for just about anybody.
Yes. And Becca, you had also said this idea that if you don't ask the question, then it's this unresolved wondering that you never really can come to an actual decision that you feel confident in. And our goal with all of our communication that we do, whether it's on the podcast or whether it's in a webinar or a workshop or training that we present or in our client meetings, coaching, wherever we are interfacing with you, our goal is that you have so much clarity that you absolutely know that you can make a positive decision for something and you know why, or you absolutely have so much clarity that it's not the right fit for you and you know exactly why. But you're not left wondering with these lingering, unresolved questions, feelings, and doubts. We want absolute transparency and clarity.
It's like Nelson said. He said, if you know what's going on, you'll know what to do. And I think it's just that simple. If you can understand what's going on, then like you said, this either becomes an obvious yes or no. That's okay too. But getting to that point of helping people make that decision is really important.
I just want to I want to spend a second on that. Just I think that sounds like it's a point in time. It's like once you know what's going on, you'll know what to do. And I think it's really important what you said earlier. There's a journey that happens. And even in his book, he talks about not trying to implement too quickly because you'll peter out. You'll fizzle out here. It's like you'll implement to the degree you understand. So early on, we know who's early on in their actual education based on what the language they're using and what they're heading towards, right? And as they progress, there's a natural progression in their understanding and what they want to do, and their belief and the foundational knowledge they have. So I don't it's not a point in time. It's going to be a journey. It's going to take, he says, 15 to 20 years before you fully implement and fully understand what needs to be done. So it's not quick. Yeah, and we're here for the journey. So
that's
come on.
that's awesome. And that's a really good point to end on. I think, Becca, you had mentioned at the beginning that none of us have arrived. And it's interesting, as you mentioned, Joe, just now, that journey that we implement according to our convictions at the present time. I can look back at my journey and know where we had different epiphanies and different understanding, and where we dug in deeper because our understanding and our vision and our context and our understanding had changed. And so it's natural and it's beautiful to recognize that you are going to, in the future, some future version of yourself is going to look back and be very grateful that you took the small first step to get started. So with that, if you would like to talk with our advisors, you can go get on our calendar to really explore what this looks like for you personally. And so the person who should book a call with our advisors is somebody who's saying, I understand enough about infinite banking to know that I want this and I want to figure out how to make it work for me. If you're not quite there yet, we have many other tools as well. You can continue listening to the podcast. We have not quite infinite volume of podcasts and videos. We have training guides. We have a webinar that our agents are doing as well that is presenting information so that you can really be able to ask your questions in a live format rather than just chatting. You can actually ask them. And so we have so many different opportunities for you to jump into beginning your educational process. And so wherever you're at right now, we have a tool and a resource to be able to help you take that one next step. But if it is talking with an advisor, you can go to themoneyadvantage.com and get on a call with our advisors, and that calendar is available. So we're going to close here, and I look forward to bringing you guys into the podcast a lot more as we progress throughout this year. And I just love hearing you guys' perspective. It's just so refreshing. So anything that you guys want to share in closing before we wrap up today?
No, I had fun. It was good talking to both of you. I enjoyed it.
Awesome.
Yeah, thanks for the opportunity.
Awesome. Well, in closing, please remember success leaves clues. So model the successful few, not the crowd, and we'll build a life and business you love.